Hey guys, welcome back to my YouTube channel. So in today's video we are going to discuss the very important topic, which is the liquidity. So without wasting time, let's get started. Welcome back to my YouTube channel. So today we are going to discuss the very important thing in smart money concepts, which is liquidity. This liquidity only runs the market, nothing else. And what is the liquidity? Liquidity is the stops of retail traders. For example, if retail trader is buying from the supply, the liquidity will be above that supply. Okay, and if somebody is buying from demand, the liquidity will be below that demand zone. For example, I should show you like this. If market is consolidating, right, like this, okay, so it's making a type of zone over here. So retail trader will make a supply zone over here, and he will make demand zone over here. So he will look for a buys over here, okay, but the thing will be totally different. It will be giving a breakout in their language, okay, it's a breakout. So they will be selling from here, okay, but what the market will do, it will do totally different. It will go up and then they will try to sell it from here, okay. Why? Because this is a supply zone for them and price has got 3 times rejected from there, so they are expecting that now also price will reject from here, okay, but the things are totally different. It will go above and take this triple highs and then it will start to fall down, okay. So this is for consolidation. And when the markets are trending, okay, where are the liquidity? When market is making higher high, higher lows, so suddenly the price can fall below 2 higher lows, okay. It can fall like this and then it can go up. Why it will fall like this? Because if somebody is buying by doing like this, break and retest, he will buy over here and he will put somewhere his stop loss over here, okay. And the same thing if he does over here, his stop loss will be somewhere around over here, okay. So that's why market falls down, takes all the liquidity from below this, all the stop losses, and then it makes its own way to the upside. So this how the liquidity works, okay. And now I should tell you that where you can find the liquidity. You can find the liquidity on sessions highs and lows and on daily highs and lows, okay, as due respect to the daily bias, because daily bias is important. So if price is taking against the daily bias, if price is taking the liquidity against the daily bias, okay, so in that thing you should find a trade. If it is taking, suppose it's a bullish, okay, the market is bullish and you can see the buy side liquidity over here, okay, so your bias is bullish, so price will take this liquidity, but then also it will not show that immensely move to the downside. It will show some little bit move in which you can do a scalp, and after that it can go more up, okay, but in totally different thing. But if it would have taken the sell side liquidity and the bias is bullish, okay, then you can get a good nice trade from here, okay. And now I should show you some examples, like as you can see over here, and on old highs and old lows there is a liquidity, because if there was any retail trader, he would have been made demand zone on this wick, right? He would have made this in demand zone on this wick and price directly falls below this and then it goes up. And the same thing happened over here. If you can see this, there was a wick over here, the price went little bit up and then it started to fall down, okay. So if you can see over here, let's go on 15-minute time frame. On 5 minute there is this, yeah, see, like there is a setup. You can see a structure shift to the upside like this, and the price falls into this fair value gap. The stop loss is too tight, but then also it fell into this fair value gap over here. This was also a fair value gap, but if there are lots of fair value gaps, you can use optimal trade entry, okay. So it falls down over here, and then it gives a good move to the upside. So this how the liquidity works. And one more thing, if you guys will notice the sessions highs and lows, okay, like see over here, these were the relative equal lows, okay. This is 1h time frame, that's why it's looking so small. But if you go into 15-minute or 5-minute, the same thing will be higher, okay. So if you can see this, price went little bit higher of this Asian high, took the liquidity from that Asian high, and then it fall down. But the same thing, it was Asian low, right? So there will be some liquidity below also. But the thing is, the bias was bearish, so you should use this liquidity with your bias, okay. And the same thing happens over here. This was the low of the London zone, price took the low of the London zone in New York zone, and then it went up. And the same thing, it keeps on happening like the same over here, okay, like this. It takes the Asian low and then it starts to move on, and in this scenario it took the London low also and this low also, okay, this Asian low. And now what about this? If you can see, so we have discussed the Asian highs and lows and the like normal liquidity, like you can find the liquidity below the Asian, like below the session high and lows. You can find the liquidity on that like old highs and lows. And now we discuss the daily highs and lows, okay. Like you can see in this example only, this was the daily low, right? This was a daily low, okay. So if it was a low, price took the low and then it went off, okay. And the same thing happens every time. Like if you guys, it takes the liquidity of before day, like this was the high of this day, okay. What's the day? 26 October. It takes the high first, so and then it keeps on falling. And this was the high of the London zone, it went up, okay, it filled this fair value gap, and then it kept on falling rest of the days. So like this how it works, okay. And I should show you one more example and then I will close the video, okay. So in this one you can see that it took the low of this day, right? It took the low and then it went off. So this how you can find the liquidity on daily highs and lows, session high and lows, okay, and on old highs and lows. And if you can see a demand or supply zones, there will be liquidity above or below that, okay. Above it there will be liquidity for supply zones above it, and there will be liquidity below the demand zone, okay. And another is another that I will discuss in some other video, which is like to do opposite of the trend line. Like if trend line is breaking, so it doesn't mean that price will fall down from and it will keep on falling and take this low, okay. It will do against it and it will go for the bias. So that's for the next video. So I hope you understood that what's the liquidity, okay. Liquidity is the stops of people, and liquidity helps the market, okay, to move. And we can find the liquidity where? On daily highs and lows, session high and lows, and in old high and lows, okay. And you can find that on above the supply zone and below the demand zone, okay. I hope you understood. So if you like this video, drop a like, share and subscribe, and please write down a comment in what topic you want the video, okay. So and until next time I will make another video on I will make another video on that trend lines and all that, how you can do opposite and you can make profits out of it, okay. So so until next time, wish you good luck and good trading.